Hello everyone, it's Fine Steady, and now I'm ringing all the alarm bells because it could be the very end of the Bitcoin bull run. Let me show you exactly what I found in the charts, what you should do with your trading positions, what you should do with your holding portfolio, and as well, I'm going to show you that this indicator as well perfectly predicted the beginning of the bull run. Guys, I'm not kidding around now. Please watch until the end of this video because this one is loaded and it might be the most important video that I've made on this channel. We have on the right side of the screen the Wyckoff events and phases distribution schematic, and this is an indicator that predicts the beginning and end of bear runs, bull runs. So basically when we're about to flip from bearish to bullish and from bullish back to bearish. So guys, right now, unfortunately, we do have almost a perfect match on the chart, which means that this pattern is valid, which means that with a very, very high degree of certainty, the bull run is most likely over and we will be starting the bear run. We are currently somewhere in phase D. You can redraw this a little bit in the future, and that's going to basically change if you're in this part of phase D or in this part of phase D. But the important thing is, as you see, it's only a straight line towards the bottom from here. So what does that mean for your trading portfolio? Well, if you are in any long positions, this is the signal to run for the hills, to close those positions and just run. If you would like to start a short position, which I'm not doing, and I'll tell you why in a second, well, if you want to start a short position, now would be the time to do it. I'm not doing that because fundamentally I'm still very bullish on Bitcoin. And guys, well, in order for us to invalidate this pattern, which is at the moment becoming very, very unlikely, we would need to go break back up above 57,000 US dollars, at which point there is a chance of invalidating this pattern and for the bull run to continue. But that is looking very, very unlikely at this moment in time. So I do think that the bearish scenario is the one that's going to play out, and that's why I'm making the most important video I've made in a long time, because right now it's basically the end of the bull run. That's my prediction at the moment. So now you know what to do with your trading portfolio. Let me tell you what I would do with my holding portfolio. Now, if, as I suggested, you have about 1 to 3% of your net worth in cryptocurrencies, then you can just don't do anything. Just keep them, hold them towards the top. We might be entering kind of a bear run for now, but long-term, the fundamentals are so strong that it doesn't matter. You're better off just holding and waiting for the fundamentals to catch up and for the price to catch up and us to go back up to the stratosphere. Now, if you have a high amount of your net worth in cryptocurrencies, I would strongly suggest taking some chips off the table as kind of an insurance. So maybe, I don't know, sell 5%, sell 10% just as an insurance, right? So if we do drop very far below, well, in that case, you can buy back in at a much cheaper price. Or if we do end up going up, well, you still have 90 to 95% of your cryptocurrency in the market working for you, going up, and you have a little bit of cash on the side as kind of an insurance. Well, you protected yourself from the downside risk and you can buy in at a little bit of a higher price. So that's how I would be playing with my holding portfolio. If you have 1 to 3% of your net worth in the holding portfolio, just hold it, don't do anything, wait for the fundamentals to catch up and for the price to catch up until the next run towards the upside. Whereas if you have a high percentage of your net worth, well, sell 5 to 10% as an insurance for this imminent bear run, and you'll be able to buy back in at a much lower price. Worst case scenario, you're wrong here and the bull run continues, and well, then you just buy back in at a bit of a higher price. But you still had 90 to 95% of your portfolio riding towards the upside. Now guys, if you enjoyed this video so far, please make sure to smash up that like button and subscribe if you want to get more urgent videos like this in the moment that I'm putting them out. Let's go back into the charts. I'm going to give you some price targets. We're going to see some more confluence in the charts, and I'm going to show you the opposite indicator and how it worked for the beginning of the bull run as well. So if you want to stick through all of that, I would appreciate it a lot, and it might be interesting for you. So stick around until the end of the video. Thank you. Okay, so let's stay with this Wyckoff event and distribution right now, as I've currently drawn it. Well, we would need to go back up and break above the 57,000 US dollar mark in order to begin invalidating this pattern. And if we are able to stay here and kind of really keep going until this pattern doesn't add up anymore with phase D, well, at that point, this pattern is invalidated. But I must say that is quite unlikely at this point. However, that is what it would take to invalidate this pattern. Now, if we were to be in this part of the chart, then let me redraw these lines just a little bit for you. And well, let's see, let's bring this back down and make it a bit more horizontal. And basically we'd want to be matching the ones from the top. So with a very, very slight incline, maybe something like that looks about right, because we should be entering this part here of the graph right now. So let's draw it something like that. Well, in that case, we would be bouncing around here for a little while until we break down past out of phase D, right? We're currently here. We would break down out of phase D. There would be one final little breath of fresh air until really, guys, the bottom is going to fall out. And let me bring up the volume profile so that you can see actually the amount of confluence that we have here. If we really were to break down below this 46,000 US dollar level, you see here that there's pretty much no more buying support underneath that. If I were to edit this a little bit and give us a little bit more range so that we really capture all of the buying that's been done here, well, you see that when we break down past this 46,000 level, our next kind of buying zone would be about 35,000 US dollars. That's probably how far down we're going to go all in one fell swoop, which is very scary. But that is what the charts are telling us, and that is my current bearish price target. Now, if we were able to invalidate this pattern, I do believe that in that case, we will be having a stratospheric pump towards the top. And in order to see where we would end up, I do think we would go to the 1.618 Fibonacci level. So let me just bring that on the chart. So if we take this recent high over here and we go down kind of to the low of this kind of time frame of the chart, well, let's look for the 1.618, and we see here that it would be taking us to the 79,000 US dollar mark, which is what I think will happen if we are able to invalidate this Wyckoff events and phases pattern, which is very, very unlikely because this pattern is pretty much almost 100% formed at this point. Right at the very end, it's just a technicality of when exactly how strongly we're going to drop. And anyway, it looks bad, guys. It looks very bad no matter what. Now, last thing I'm going to show you guys is the inverse of this pattern and how it predicted the bull run to begin, just so you guys can see that this pattern really, really works. So guys, here you have once again a Picasso drawing, and this was the prediction of the bull run starting. As you see here, this is the accumulation schematic again of the Wyckoff events and phases. You have all the different parts of the charts here, phase A, B, C, D, E. I painstakingly retraced everything A, B, C, D, even the resistance and the support lines, and you see here that right after phase E, we went absolutely stratospheric, and guys, the rest is history. We went from 11,000 all the way to, and let's just keep scrolling here, we went all the way from 11,000 to 65,000 US dollars, guys. That's almost an 11x, which was predicted by this pattern. So as you can see here, this pattern really is very, very important, and we should pay attention to it. So thank you guys so much for watching. If you got smarter with me today, please hit that subscribe button and the bell to get the notifications when these videos go live. Thank you guys. See you in the next one. Bye. Please make sure to do your own financial research soon. This isn't financial advice, etc., etc.